So putting money into a Roth IRA versus a traditional IRA isn't really based on age. In a perfect world, we would know exactly what our tax bracket is going to be in retirement. Then we could just compare that tax bracket to our tax bracket today. If the tax bracket today is higher, we put money in a traditional IRA. If the tax bracket today is lower, then we put money in a Roth IRA. The problem is that we have no idea what our tax rate is going to be in retirement because we don't know how much we'll be making and we don't know how tax law will change between now and then. But here's the thing. IRAs have a maximum annual contribution, so you can only put in a certain amount every year. And even though these two accounts work differently, they share the same limit, $7,000 for each of them. But if you put $7,000 into a Roth IRA, you're going to get $7,000 out at some point. If you put $7,000 into a traditional IRA, you're going to pay taxes on all of that money when it comes out. Now, technically, putting money into a Roth IRA is more expensive because you have to pay taxes and then contribute. So to put $7,000 into a Roth, you would have to pay about $9,000, including the taxes. But it doesn't change the amount you can contribute, right? You can still put in $7,000. So it's kind of like saving $9,000 into a traditional IRA. So if you can max out that Roth IRA for 20 years and you can grow it at 7%, you're going to end up with somewhere around $287,000. If you did the same thing in the traditional IRA, you would end up with the same number, but then you would pay taxes on all of the money when it comes out. So pound for pound, you get more money out of a Roth IRA than you would out of a traditional IRA, assuming you can max out either. If there wasn't a maximum and you put $9,000 into a traditional IRA versus putting $7,000 into a Roth IRA, then you would end up with the same money in your pocket in retirement. But because of the limits, Roth IRAs end up becoming way more attractive.